Good evening, everyone. I am Kaynat Chainwala. It is so I'm taking care of. I'm a research analyst for base metals, and today we will be briefly discussing about the opportunities in base metals, and like what are the trading opportunities. Very briefly, we'll be discussing that, and what are the reasons, like how do the opportunities actually arise, and the reasons behind the same. So just let's start with the presentation now. Okay, so the agenda for today is first we'll be studying base metals and its applications, then moving on to factors affecting base metal prices, then the trading avenues which are available to us for trading, and then the identifying part of the trading opportunities in very brief. So, actually, what are base metals? So, base metals, as the name suggests, they are some, they are the basic raw materials, and they are the metals which are, abundantly available, and it's kind of you can say it's readily available, cheaper as compared to precious metals, and also less, difficult to mine as compared to precious metals. So when I say readily available, I mean the quantity or the copper market, if we talk about it, it's like a 25 million tons copper market. Aluminium, it's more than 70 million tons. Lead and zinc both are almost like 13, 14 million tons. So these metals are, abundantly available. And specifically when we talk about base metals, the ones which are traded on the MCX, we are talking about the non-ferrous industrial metals. The non-ferrous industrial metals that are widely traded are copper, aluminium, lead, zinc, tin, and nickel. On the MCX, we have all the base metals except for tin. On the LME, we have all the six of them. Now, why do we study base metals? Apart from being widely abundant, the applications, it has a lot of applications in our day-to-day life. The base metals find applications across a wide range of industries, including but definitely not limited to construction, electrical, electronics and telecom, machinery, transportation, and consumer products. So as you can see, you use base metals on a daily basis, be it your like taps or your wires. Everything contains base metals. So this is something that we use on a regular basis. So it has a lot of wide applications. And yes, since it has a lot of applications and it is available to trade, it offers a lot of opportunities. Now talking about the factors that affect base metal prices. When we are talking about base metal prices, specifically, like base metal is also an asset, right? So all the risky assets, they gain momentum, they gain steam, they gain investors' attention whenever the markets are doing well, whenever the economic outlook is good. So it's extremely important that the macroeconomic situation, if the macroeconomic situation is good, there are no major tensions as such, and there's no major mishappenings across the globe, and the monetary policy also is like quite favorable. Then mostly investors are more they are more biased towards risky assets. But whenever the macroeconomic situation is, there is something that happens which affects, the macroeconomic situation, which could be a geopolitical situation, which could be a monetary policy scenario, which could be anything which is like, even an unexpected situation. This will definitely affect the risky assets, because markets would more likely, investors would not want to take risk and would move towards less risky assets, or what we call as the safe haven asset. Now, when we talk about the safe haven assets, it's basically, specifically it's dollar and gold. Mostly whenever markets, are not performing well, investors are more biased or move towards or flock towards safe haven assets. So that is why we say that the macroeconomic situation is very important, as it determines the risk appetite and investors' bias towards the risky assets. Second thing is China. China, as we all know, China is the biggest producer as well as consumer of most base metals. If you actually look at the bifurcation of the demand, country-wise, you will see that China leads, first of all, and it does not lead by a very small margin. It is almost like it covers, contributes to almost 50% of consumption for all the base metals. So that is something that, China is something which cannot be ignored when it comes to base metals as an economy. As a country, it drives the consumption of base metals. So when China is not doing well, definitely base metals outlook is going to get hurt, and we might see base metal prices sliding like we have seen in the last 1 year specifically, because we've seen that almost like initially in 2023 there were a lot of hopes that China would after the restrictions were eased, the COVID restrictions were eased last year. Then markets had become very optimistic that now Chinese demand will pick up and then we'll see a strong rebound, and which will reflect in base metal prices as well. Unfortunately, that did not happen because China continues to struggle till now. There are signs of uneven recovery. So, because of that, we had seen that after touching the highest levels of 2023 in January, prices have continued to slide in the subsequent months. Although we have seen recovery also in the following months, but we haven't seen the levels seen in January yet. The third thing is supply demand dynamics. Like all the other commodities, similar, base metals also, they have a certain supply and demand. Of course, whenever the supply exceeds demand, it is considered as negative for prices, and whenever demand is outpacing supply, it's positive for prices. So that's the basic supply demand dynamics. That is why we keep tab on supply demand figures coming in from international study groups. Like we have ICSG, International Copper Study Group for copper, ISZSG for lead and zinc, and IAI, that is International Aluminium Institute for aluminium. So we need to keep tabs on what the supply demand picture is looking like, whether the market is in surplus, whether the market is in deficit, what is the outlook for the next year. So this is something that affects the price outlook for all the base metals. Talking about the industrial and manufacturing activity. As we've seen in the previous slide, the applications of base metals, industrial and manufacturing activity is a core part, for the demand of base metals. So if the, global economy or major developing nations are not doing well in terms of, their manufacturing PMI is coming down and they are not really doing well economically as well, then it's definitely not a good sign for base metals, and we might see prices, a negative impact on metal prices. On the other hand, if the manufacturing PMIs are showing expansion, have continued to show like growth in the in the recent months, or have or show promise of expansion in the coming months as well, that holds good for all the base metals and is considered as a positive sign for the metals demand. So that is something that is definitely looked at when it comes to base metals. Talking about monetary policy of major global economies. So now, when we say monetary policy, we are basically talking, most importantly, talking about the interest rates. What are the interest rates in the major global economies? And mostly it is the US. Since all the commodities are denominated in dollars, the US monetary policy, the US economic situation is something that is a very you can say one of the most important determinants of the you can say how the prices will perform for all commodities rather. So when we're talking about US specifically, like we have seen in the recent past that US has been continuously tightening their monetary policy, and now probably they have given indications that they are going to the indications through the economic data that probably next year we might see rate cuts. So when the rate cuts are there, that is considered a little it's considered positive for overall markets, and that is why we have seen recovery in the asset classes, in the commodities, equities, all the risky assets in the recent in the last month specifically. So, that is why it is very important. Normally, easy monetary policy is considered, something that is, more stimulus-driven policy, and that is why easy monetary policy is mostly it, helps it helps support the positive sentiments in the markets, unless it is a special situation wherein the easy monetary policy has extended for a long time, which might affect the domestic currency of the local currency, where the monetary policy has remained in hasn't eased for a long time. So that could be a negative for the domestic currency, but overall, usually easy monetary policy is considered a positive sign. Talking about geopolitical situation, so now that is also something that's very important, because a lot of political situation, mine related issues, strikes, they have a direct impact on the supply of the metals. and which these supply disruptions could actually affect metal prices significantly. That is why it's very important to have a very peaceful or you can say investor friendly environment in the major producer countries. Chile and Peru, as I've mentioned here, are the major producers for copper. And we have seen that in the recent past, there have been a lot of mine strikes, there are a lot of mine closures that have happened in these countries, which have been pretty supportive for copper prices. So that is why it is very important that the geopolitical situation needs to be monitored in especially in major producers. Similarly, for global trade policies, so if there's a certain major producer country, like we have seen in case of nickel, Indonesia has been like a major producer for nickel ore, and China has been a major importer from Indonesia. They used to mostly import nickel ore from Indonesia. But in 2014 and again in 2019, Indonesia had imposed an ore export ban, which prompted or forced China to look for alternatives. And that is when Philippines came into picture. So Philippines had tried to fill the void which has been left by Indonesia. So simple trade policy could actually have a very significant impact. Could directly influence prices if it is coming from any major producer or major consumer. Then we have LME inventories and Shanghai inventories. So these LME inventory figures are released daily, now at 2:30 p.m. IST, and Shanghai inventory figures are released weekly every Friday at 2:30. So these figures are very important to monitor because it gives an idea of what the stock situation is like on the major global exchanges. So whenever we see that LME inventories are continuously rising, that's definitely a negative sign for the specific metal. And a declining inventory scenario definitely holds true, it's considered as a positive signal for the metal, because declining inventories are usually linked to consumption, and which supports the demand theory, which is why declining inventories are positive and increasing inventories are considered negative. So that needs to be monitored. Then we have developments on the cleaner energy side. Now the cleaner energy is we are all moving towards green energy, clean energy, in the coming years, and which will require a lot of base metals. So in the coming year, the demand could be demand a major demand could come from these sectors, clean energy sectors, and which is another sector that we need to closely look at. Then we have the LME court report, which is released every Tuesday, and it reflects the positions held at close of business the previous Friday. It gives you the positions, the net long or net short position, whether the market is at net long or net short. It tells you how the money managers are thinking about the market, whether they are bullish, whether they are bearish. So it's an indication of price outlook by these market participants. So it's something that is keenly watched by traders and investors across. Now that we've spoken about base metal application and base metals, what factors influence them, let's just see whether they provide good trading opportunities. Now, for a good trading opportunity, prices need to move. Like all commodities, even base metals have high price volatility. Even we have seen, like in the last 3 years specifically, the price volatility has been the price swings have been extremely volatile, specifically because we've had COVID, we've had global monetary policy tightening, Russia Ukraine tensions, European gas prices. Each of these events has had a very you can say had a very hard impact on the global markets. And no asset class has been left unaffected. Every asset class has been moved by these events. And because of this, we've seen like extreme volatility, extreme price swings. So, and what do we expect for next year? Next year also, we might expect the price swings to continue, because now that the global central banks are actually showing a shift towards changing their policy, or what we called as the pivot towards easing monetary policy. So we will see whether how they find that balance between inflation and growth. So and the expectations of shift in monetary policy. All these events will keep prices, moving, or we will see price swings next year as well because of these events. So I mean, Normally when we say volatility, it's actually considered risk, but to have good trading opportunities, a decent volatility is required in the market. If a commodity or if any other asset class, if it continues to move in a very narrow range, you will not really get any trading opportunities. But when it has a decent kind of volatility, it definitely gives more trading opportunities, which could be used by a lot of market participants. Now, what are the financial market instruments which are widely used for trading purposes? Normally, it's futures, options, forwards, and swaps. But in India, if you see on the MCX, futures are most widely used by the domestic retail participants. And the reason given is that it has high liquidity, and of course, we have low margins and high leverage. So high liquidity is something which is, the most important reason why market participants prefer, MCX futures. Now, this is, like I said, risk. Now, this is the price move of all the base metals in the last few years, and specifically in the last 6 7 years. You can see that it has been extreme. Like in the, right from 2016 to 2019, prices were moving kind of, in certain range, but then the price moves got extremely volatile somewhere around 2020, 21, 22, and we all know the reason why, because it was COVID. So price had seen extreme swings, because earlier it was fear of COVID that pushed prices lower. And people were expecting how will the global economy emerge out of this catastrophic situation. But then things improved, and then we had vaccines, and then the outlook also improved, which led to a spike in prices somewhere in 2021, 2022. And we had seen this wild spike in end of 2021, and then again prices have tried again moved to a certain range. So base metals have not been. This is nothing new for base metals, because if you see in the last 5 years, I've given on the right side the tables for LME and MCX annualized volatility. Like you can see, like for copper, it has been 18% in 2019, and then in 2022 and 2023, it increased to 21 and 24%, and again FY 2024 till December, it has been 17%, which is a decent enough volatility. Same goes for MCX copper. Copper also has seen, like on the MCX also, it has seen like 18 to 20% volatility in 2021 and 22. And then we have, like now we are seeing a 13-14% volatility in the last 8 9 months. Same for aluminium, zinc, and lead. If you see in case of zinc specifically, has seen extreme volatility in 2023, FY 2023, and now also it continues to see a high volatility because of a lot of supply disruptions, European gas prices. All of these events, directly influence the price of zinc, and which is why we have seen an extra, push to zinc prices whenever there is some, you can say, some mine closures, or when the European gas crisis, it starts to it actually completely ended, and then now they are very sufficient with gas, and because of that the supply disruptions begin to reduce, and that is why we had seen a pullback in zinc prices early this year. And now again we are back to like positive zinc prices, because we have seen like a lot of zinc mines have continued to kind of remain shut, and more mines have in fact have announced that they will probably go for care and maintenance in the coming months, which is why zinc prices have been kind of supported in the recent period. But yeah, the volatility remains high because of the push and pull from these factors. Same goes for lead. We have seen like the movement of the volatility in lead is like 26-27%, and now it's like 17% this year. So now the volatility is actually coming, to a, like a basic range after like extreme swings in the last 2 3 years. Now this is the heat map of LME copper. As you can see, the price moves you cannot really predict. There's no, apart from November and December, where you have seen like most of the months are, most of the years it has remained in the green because of the construction demand that usually picks up, in late. In the latter part of the year. Other than that, you cannot really make out like when the price are going to perform like what. So the volatility remains extremely high in case of LME copper. Same goes for MCX copper as well. So this is the reason why there are a lot of trading opportunities. If you could like just have an idea of the overall factors what are actually playing out in the macroeconomic situation, then you can definitely given this kind of volatility, you can build your trade around that fundamental and technical basis and take a call on the same. Now, what are the trading avenues that are available to us? Now we have LME, we have CME, we have MCX. Now LME is the normally the benchmark that we usually talk about when we are talking about metal prices. So that's a global platform, the London Metal Exchange. It has a lot of contracts available, which are daily, weekly, monthly contracts, and available till 123 months. And it is basically normally it's used by hedgers who have like exposures which run into years, which have like projects and contracts that run into years. So they want the contracts which have like the expiry dates are pretty far. So they would like want that kind of products, so that to avoid like too many rollovers. So that is why they prefer LME. And on the LME, the lot size is 25 tons for all the non-ferrous metals, except for nickel, which is 6 tons contract. Now, on the CME, it's a global platform. There you have monthly contracts available, like on the MCX, and the lot size is 25,000 pounds for copper and 25 tons for aluminium. Then talking about the MCX, which is our domestic platform, we have like monthly contracts available. You have like you can take positions on the MCX, and you have like 2-3 contracts which are available for trade every time. So you can take positions, and if you want, you can exit before the tender period, which is the last 5 trading days, and uh, and if you want, you can even roll over your position to the next contract. But every all this thing needs to be done before the tender period. Once the contract enters the tender period, you will have to take delivery. Then, talking about the lot size, we have both regular and mini contracts are available on the MCX. So, depending on the pocket size that you have, you can always, start with a very small amount and trade on the MCX. Now, talking about this, this is the high correlation between LME and MCX. Like you can see, the price have almost always moved in tandem, except for few, differences, which is specifically because now we have a delivery period. Now we have, you can say, a domestic delivery mechanism in place, so you can take delivery on the MCX as well. Earlier, it was not available. So, because of that, there could be some discrepancies. But overall, if you see, the factors that influence prices remain the same, and that is why we continue to see a very high correlation between the LME and MCX. So that is the reason why you can, based on the factors, you can always take position either on the LME or for trading, you can only take positions on the MCX, because for LME you need to show your exposure and you can only hedge. LME you cannot really trade. It is MCX wherein you have a lot of options to trade, and since it has like it shares such a high correlation with LME, you can trade basis the global factors as well. But yes, since the delivery has started here, you also need to take care of the domestic, domestic stocks, how the domestic market is, working, what is the supply demand situation domestically, and then you can take a call on the MCX prices. Now, this is the MCX contract specifications that are available. Okay, so we have a 2.5 tons contract for copper, and the average daily volume that has been there for FY 2024 from April to November has been 15,900 metric tons. For aluminium, we have 5 metric tons trading unit, one lot, and the average daily volume has been 12,000 metric tons. Zinc and lead also have 5 tons contract size, lot size, and we have like a 27,000 tons average daily volumes on the MCX for zinc, and 3,600 tons for lead. Also, aluminium, zinc, and lead, all three of these have like mini contracts. It's like 1 ton contract. So you can, take a call on the regular contract or on the mini contract depending on the pocket size. So it definitely gives you more options to trade. So, this is definitely very beneficial for traders who do not really want to put a lot of money into and trade the regular contract. So they have this option as well. Now, talking about trading opportunities. Usually, when we are talking about trading opportunities, the very basic trading opportunity that comes to your mind is taking position in futures contract. So, when you take position in future contract, like I said, since the volatility is extremely high, the price, like in case of copper, it is like 18% volatility. The price, if it is at 100, it could move to 118 or it could move to 92. The prices could move in this wide range of 92 to 118. But in case if you have like an outlook, if you are well read about the macroeconomic situation, then with the support of technical analysis, definitely it becomes much easier to take a call and trade in the futures that are available on the MCX. Now, it depends whether the market is suggesting a bullish kind of outlook or bearish kind of outlook. Depending on the price outlook, you could take a long or short position in futures on the exchange. Other than that, we do have like some opportunities which are pretty rare to come across, but yes, there are certain opportunities like this, which is intra-market spread, which is a calendar spread wherein you can buy a commodity derivative in 1 month and sell the same, uh, the same derivative with the same underlying in the other month. So it's like talking about copper Jan and copper Feb. So that is the calendar spread that we are talking about. Usually, it so happens that profit on one leg offsets the other if because you're taking two opposite positions, of course. So profit on one will offset the loss on the other, but there could be time where your profit will may outweigh your loss. But yeah, this is the spread that you can trade in, but it's pretty rare to come across. Then there is intermarket spread, wherein you have two different underlying. So it could be like crude and copper, gold and copper. So, but you need to take into account that those two commodities they share a high correlation. Only then this intermarket spread might work. So, wherein you can simultaneously buy a commodity future contract with a given expiration month, and you have to sell a closely related commodity. When I say closely related, the commodity means the commodity which shares a high correlation with the same. You can just buy one commodity and sell the another, but the expiration month has to be the same. So this is the intermarket spread. Again, this is like a very, we can say, an opportunity which you will have to actually kind of find in markets. It is not easily available. You have to actually see how the correlation works out, and then depending on the correlation and the ratio that's working out, only then can you take a call on the intermarket spread. So the easiest is using futures to kind of take advantage of an expected price move, or basis on news, and of course supported by technical analysis. Then you can take a call. That is something that is easier compared to these spreads, which are somewhat rare to come across. So now let us just take a look at the triggers, the fundamental triggers that caused wild price swings in 2023. If you see in January itself, like hit the prices had hit a high because we were expecting the demand recovery in China as COVID restrictions were lifted last year. So that is something which led to high prices in January. After that, prices actually came down because there was a lack of visible signs of recovery from China. Also, there was the US financial crisis that started, the banking crisis that started, because of which a lot of banks came under radar, and which led to a fears of contagion, and which affected the global risk appetite, hurting risky assets, including the base metals. So we could see this impact of the same on copper as well. Then we had seen that in the mid 2023, the dollar gained momentum on prospects of more Fed tightening, and also there was US debt ceiling impasse, which was later resolved. Though this affected the risk appetite and weighed on copper prices. Then we had seen like signs of cooling inflation and hopes of announcement of significant stimulus from China, which hinted towards uneven recovery. So this actually led to a recovery in prices because as the US inflation showed signs of cooling down, the market expectations that the easing could be near, the monetary policy easing or a Fed pivot could be near increased, which led to recovery in risk appetite and in recovery in risky assets, including copper. Then again, we had the Israel Hamas war and property market crisis in China, which affected base metals severely in October, pushing copper prices to almost like 1 year lows in October. So all of these events, if you if you are well read, if you've read about these events, these are some events which have an impact for some time. It's not that one day it will be positive, second it will be negative. No, it has a lasting impact. And if this is kind of combined with a good technical analysis, it could definitely give you direction to take a call on the exchange. So I think these triggers, combined with a technical, good technical analysis, could be supportive and could be helpful in taking good calls on the exchange, and could actually make more opportunities for anyone in the market. So that's all from my side for today. If there are any queries, you may just go ahead. So there's someone who wants to know about crude oil and NG, but this session is specifically about base metals, so I can't comment much on that. But we'll definitely arrange some session wherein you will get similar insight into the crude oil and NG as well. Uh, then there's a query: which exchange is biggest for trading options in base metal across the world? Normally, it's LME is considered like a global benchmark exchange, but I don't think I'll be able to comment on figures in terms of options how it is going to be. But usually, it is the LME which is normally used for trade across the globe. For domestic participants, you need to have even for trading, or you need to actually have an actual exposure for to base metals, which you need to show even to kind of trade on that platform. So it's not available directly to trade. Uh, can we trade in metals like uranium on MCX? No, the metals that I mentioned, which is aluminium, nickel, zinc, lead, and copper, are the only metals which are available for trading on the MCX. Okay. Okay, someone wants to ask correlation between base metals and gold and silver. Yes, specifically copper and gold share a correlation, which could be an inverse correlation. And silver and metals might most likely might share like I don't think it is like a very good correlation because silver is something which is actually, it moves in tandem with both gold and base metals. So, the both the factors of both the asset classes affect silver, similarly because silver, takes cues from gold since it's also precious metals, and silver finds application industrially as well, which is why it takes cues from industrial metals as well. So yes, silver might not share a very good correlation, but yes, copper and gold do share a negative correlation because specifically because gold, it benefits from, it mostly benefits from safe haven buying, which is when markets are negative, which in turn is negative for copper price as well. If the market outlook or the macroeconomic situation, like I said, if it is not good, it is considered negative for the overall macroeconomic scenario, and then construction and manufacturing, everything is considered to be negative, and then which is again considered negative for copper, but it is something that is positive for gold. So copper and gold share positive correlation. Okay. There is one query which is, I'm new to trading. What's the best advice for me for options trading? Um, and notice that I know all the basics as I'm practicing for around 5 months. See, for trading, basically, the technical analyst will be able to help you much, and we do have, seminars by them as well. Or you can even get in touch with the team. We share the number at the end of the presentation. You can get in touch, and they could provide you assistance on how to, how options trading is done. So that will probably help. Then does KS provide research for metals trading? Yeah, we do. I am taking care of base metals, in fact. So we do provide daily reports, weekly reports to our clients. So yes, we do research for metals trading. We have special reports as well. And yeah, these reports are definitely, it gives you both like fundamental, technical, everything is included in that report. So we provide that to all our clients. Can commodity market be manipulated by big players? Yes, of course, because it's an asset class. It depends. Like as I said, the court report in the first slide as well. That it tells you about what is the money managers positioning on the metals, whether they hold a bullish outlook or a bearish outlook. So if they have a bearish outlook, and you will see the net shorts rising, the markets can believe, because these are like big players. So markets can be prompted or forced to believe that the prices are going to go down. So that way they can influence. How manipulative that could be, I don't know, but definitely it's like a very influential factor. So big players definitely can influence prices as well, in commodities as well, specifically speculative trades, or like that. So that also needs to be monitored. But then you need to make a wiser decision. It is always important to have your own research done, both in terms of fundamentals and technicals. Okay, I guess that's all for today. Thank you all for listening. Have a nice day.